Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 26th of March. I'm Daniel Lam, your host for the podcast. I'm less than 3 weeks away from participating in the International Chess Tournament to celebrate the 150th anniversary of my secondary school. But my form has been terrible. So last Sunday, my coach begged me not to play so badly. He said he was risking years of his life looking at my games, and sadly, I do concur with him. Now, many investors in Chinese equities would also be experiencing quite a bit of frustration. Yes, there has been rising allocation into Chinese equities from both global hedge funds and also active funds over the last 6 weeks. But this is mostly concentrated upon the technology-related stocks. The positivity related to DeepSeek has not yet been broadening out to the quote-unquote real economy sectors. For example, if you dig deeper into a sectorial basis, there is a heavy concentration on the internet sector for the EPS upgrades in China in the first quarter of this year. Earnings downgrades are still prevalent in other sectors, such as banks, consumer ex-internet and autos, and property developers. Is DeepSeek going to eventually loop back to the mass economy and help generate wealth effect? Well, we believe this may take some time. This is because 50% of jobs in China is in agriculture, manufacturing, and construction, compared to only 20% in the US. So it is relatively more difficult to make such labor-intensive areas more efficient by AI. In order for the non-technology sectors to turn for the better, we need to see betterment of the property sector, which would, in turn, help generate animal spirit for consumption and reversing the disinflationary trend. In the latest set of housing data, there are some early signs of stabilization in the China housing market, but the full recovery still appears to be distant. Housing demand seems to have found the floor, and developers' cash flows are no longer deteriorating at double-digit rates. But oversupply remains a major challenge, keeping home price deflation intact. Housing starts have fallen to 2005 to 2006 levels, and further declines are likely due to poor financing conditions and government restrictions. Now, this could eventually lead to sharp price rebound in top-tier cities once sentiment improves, given constrained land supply and limited new developments. But this opportunity cost of waiting could also be drawn out and high. Therefore, we believe buying the offshore Chinese technology-related stocks on pullbacks remain the preferred idea. Say if Hang Seng Index pulls back to levels such as 22,600 and 21,600. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.